DeFi Slate team.
What's up, y'all? Real quick, if you like the DeFi Slate content on Twitter and YouTube and Substack, please give us a like and a subscribe on this video on YouTube. Join our channel, join the community. We'd really appreciate it. We're pumping this stuff out for y'all as much as we can, and we really enjoy the support and the community that we've built. Thank you very much and enjoy. What's going on, guys? Welcome to episode 50 of the DeFi by Design podcast. And we are here today with Jay from Avalanche. Jay has been leading the marketing charge at Avalanche, which is definitely something that we'd like to discuss. There's a lot of projects going on right now with a lot of marketing, a lot of everything seems to be happening right now. And right now, the alternative layer one chain is kind of in a space race as far as growing users. We had a period where Arbitrum and Optimism were supposed to launch, and now the alternative layer ones are kind of like our layer two. I do believe Arbitrum, as you're going to be hearing this in a few weeks from the time that we actually record it, should be live and up with a good bit of projects launched. But for now, it is the alternative layer one anti-Ethereum maxi race, and we are pushing forward right now with just a whole lot of development happening. So in this podcast, we're going to go over what's happening on Avalanche, how to get involved on the yield farming there, what's going on with available rates, protocols, what you can get into, kind of how their team has been building and the marketing. Overall, what Jay's thoughts are about this L1 space race, how to take advantage of it as an investor and a user, and kind of how to manage your risk through this entire process of DeFi, and kind of what the future of the vision of this DeFi is going to be now that we've got kind of a more developed ecosystem than even just 6 months ago, right? So looking forward to kind of hearing about all of this and diving more into what's going on at Avalanche with the Avalanche Rush program. There's $180 million worth of incentives being deployed there over some amount of time. So that's going to be exciting to dive deeper into as well and learn more about. So pass it over to Rob, and we'll get it off the ground.
Yeah, definitely stoked to have you on, Jay. And there's so much action going on at Avalanche. As Andy said, it's really a space race as in terms of these other layer ones. People refer to them as Ethereum killers and this and that, but ultimately it's these competing blockchains, and they're building the multi-chain together. So yeah, I'm keen to kind of get into kind of what that multi-chain looks like and kind of this encompassing world of different layer one solutions. So yeah, we now see that layer ones have the possibility for layer twos as well, and kind of just how that stack evolves. I am kind of like interested and you got a nice spot at Avalanche. So I'll pass it over to you and let you introduce yourself.
Yeah, thanks guys. Really excited to be here. Let me just quickly get into my background before we kind of cut into some of the overviews with Avalanche. So with my background, I've been in crypto for almost since the beginning, starting with the Bitcoin kind of interaction there in 2011. That's when stumbled in a little bit accidentally, I would say, like most people probably when they first interact with Bitcoin. And not until the Ethereum white paper came out with Vitalik really evangelizing that work did it kind of click in my head saying, okay, I think this is more than just payments. This could be something larger than what we're seeing on the Bitcoin side. And that's what really piqued my interest. And in 2015-16, I was at an agency called 𝗶𝗶𝗃𝗵, one of the biggest agencies in the world. It's a full service shop. Started my own blockchain consultancy shop there, focused on marketing and brand alongside 3 other folks there. So we were doing that for about a year and change. And what we saw was a lot of interest, both from the larger institutions who wanted to play in blockchain, but you also saw some interest with startups, especially the ones that got really well capitalized during the ICO boom and just the token sale mechanism that really got introduced during that era. And soon after, switched roles to a firm called Fluidity, fully in the blockchain space. 2 main work streams there. One was with a decentralized exchange called AirSwap. That is now MetaMask Swaps. So you are interacting with that right now. And that a lot of my former colleagues and really good friends are on that MetaMask team. And then also on the flip side, we were working towards security tokens. I would say, without getting into too much of that detail, maybe we could talk about it later if it comes up, but it was a little early. So I think it was just a lot of learning and honestly, incredible experience. I would never trade that for the world. Incredible team. A lot of the guys on the Fluidity side are doing bigger and greater things there. And then most recently joined Avalabs. Avalabs is a company that's working on the Avalanche blockchain. So that's what you guys were talking about earlier. And that's where I'm leading marketing since May 2020. And that's kind of grown quite significantly. I was the first and second hire of the marketing team. We kind of came in at the same time. That's why I say first and second. And now we're about, I think I want to say like 30, 40, including community managers and the community side of things. So that's where we are now. And I think a lot of the work that we've done kind of culminates to the conversation now, but also some things that aren't even public yet. So I think maybe in a follow-up episode, there's probably a lot more to unpack. And I think what I'll lead off with kind of the intros bit is Avalanche is the fastest smart contracts as measured by transaction finality or settlement. The reason why that's super important is because you have these smart contract systems. You have many of them. The layer ones, ETH being the biggest in terms of user base. It has to be comparable or better than Web 2 systems. Otherwise, beyond the circles of likely the people that are listening, also people on this call, you're not going to get that kind of mainstream appeal. It's just not going to happen because we're humans who require instant gratification, and technology should absolutely keep up or surpass those expectations. And so we feel like if we built the system from the ground up all the way down to the consensus protocol, then we can really unpack a lot of amazing things. And I think that's kind of like if you were to build a house, you wouldn't necessarily want to continue to do renovations if it was already deteriorating in its foundation. You would really want to take a look at the foundation and make sure that that's solid before you continue to build up in this very fast-paced world. So going to stop there in terms of intros, and I think we can get into some interesting topics.
Yeah. So right away, you kind of talk about the consensus layer as the base layer and changing or putting out a different thing that's, not broken, almost referring to Ethereum in that way. Could you kind of, bring us from an Ethereum maximalist perspective into kind of this multi-chain ecosystem, how you see those chains fitting together? And ultimately, there was only Ethereum. How did we get to this point, and is it sustainable?
Yeah, I think it's not necessarily the multi-chain kind of direction, smart contracts enabled or not, has always existed since or after Bitcoin, I would say. Once Bitcoin came along, you basically saw a lot of these groups of developers, other developers who were probably part of that core, who were like, hey, I have a better idea. And that's kind of the beauty of open source technology. You can really take what's already been worked on, and you don't have to start from scratch, and you can leverage some of that information and really see if you can change things for the better. So with peer-to-peer payments, you really saw that in like 2015, 2014 even. And also you really saw that in the 2017 ICO run, where you had all these payment chains. Think about Bitcoin, then Bitcoin Cash, Litecoin, and the list goes on. And then you had DAG, where people were like, well, linear blockchain, or blockchains that are sorting things in a linear fashion. I guess all blockchains are linear, but consensus reached in a linear fashion, or transactions finalized, in a linear fashion. That doesn't actually have to be that way if the order doesn't matter. So for example, payments doesn't have to have A after, or like X, Z, Y, and Z. It can go in any order so long as it gets sent and received. So you have implementations of the directed acyclic graph, which doesn't take into order into its design and says, hey, let's just prioritize speed. Avalanche has a DAG. Other ones I think that I know of off the top of my head, actually don't know terribly how strong they are these days, but Nano, I know that's a pretty big DAG. There were a bunch, like IOTA, I think was going to do that. I'm not sure where they're at these days. The point being, there's a bunch of people trying to create the solution for that problem. And with smart contracts, you're having the same thing. Unfortunately, with smart contracts, you do need that order, because it has dependencies, and order is important for these executions. And so similar way, all these smart contract kind of developers and designers, they were looking at ETH and saying, well, maybe there's a better way to do this. And better is always kind of subjective in this point. It's not really clear what better really is in the long run, but I think everyone has an idea. So with Avalanche, we're saying, hey, we can improve a lot of these things, not only within Ethereum, but also other chains that are pretty prominent. And then from there, our biggest strength is transactionality, like I said before. And so that's what we're kind of pushing in the forefront, so people really understand who we are as a team, one of the teams building Avalanche. And I think to kind of answer the initial question of how do we get here, it's just kind of the innovative cycle. You have a lot of people kind of joining in the race, and I think everyone has a shot at it. That's what's really cool about our space. And so to me, I come from the Ethereum space too, first and foremost. Maximalism is such a short-sighted way to look at things. I understand that there is vested interest in a lot of the technologies that leverage blockchain because of the tokens, but at the end of the day, it kind of stifles yourself, and it stifles this very small space that still has so much to grow. And there's almost a piece for everybody, or maybe not everybody, but for a lot of people. And I think that's how we got here. And hopefully in the future, interoperability would be the next step to really make sure that we all have this collaborative ecosystem instead of having these siloed pockets of liquidity. And then I think lastly, with interoperability, then making sure that we have proper composability, not like 1,000,001 wrapped tokens, but perhaps one standard where the user sees something, but then underlying it is all of the kind of wrapped assets that we're probably interacting with right now.
Yeah, and preferably yield-bearing assets as the typical standard. So, staked ETH and, even like interest-bearing Bitcoin via Badger, or, staked AVAX, where it's AVAX that is staked and always earning yield rather than just the bear asset. Now, obviously that introduces more complexities, but again, just like more and more of this is just, it's just broad ecosystem growth. And yeah, I mean, the interoperability, as well as you mentioned, is huge. One thing that is going to be the most bullish thing, I think, in the entire DeFi space the next 18 months or so, I'm saying the most bullish thing is cross-chain aggregators. So like, how can we get 1inch to like get liquidity from every DEX on every exchange, and you just have to go to one place at one time and do the trade? That would be insane. And then you can choose like where it goes or what wallet it's from, right? So that, I think that interoperability is going to be huge. And right now we kind of have the island of Ethereum, and people are being pushed off of this island, let's call it Manhattan, because it's expensive to live in Manhattan. Everything is clogged, and there's a whole lot of people and a whole lot of crap going on that, you can just go out to Long Island and to Boston and to, Australia and New Zealand and get better access to what you need. And these, this is the Avalanches, the Phantoms, the Polygons, right? And so we're kind of building this moat around, Ethereum at the same time. And then all these can then interoperate with each other as well. So to avoid having to go through Manhattan to go to a different location, right? So I think that's going to be a really interesting trend to follow as well. And I think it's something to discuss is why leave Ethereum? Well, you leave Manhattan because it's busy and there's way too many people and way too much traffic and it's too expensive. Kind of the same things happening on the blockchain right now. Ethereum is too busy, gas is too high, there's too much going on, prices are just way too much for the average user, so people are going elsewhere. But even more importantly, there's incentives elsewhere, and that's what's happening right now as to why DeFi 2.0 is kind of coming back. It's these liquidity incentives that are being introduced to platforms like Avalanche. So walk us through how we got here for the Avalanche Rush. What was the thought process behind that? Right? How are you guys growing that and building that, onboarding DeFi protocols? And then I'd like to get into some of the nitty gritty of like, how are we going to avoid liquidity locusts? How are you going to grow a longer term community who's just not here for the yields and leaving? How are you going to, keep the inflation down and, keep the token prices kind of handled? So there's a lot of token economics too, but first let's dive into what Avalanche Rush is, how our community can get involved, how it started, and what's happening right now. And then let's get into some of the nitty gritty.
Yeah, let me overview what Avalanche Rush is. So Avalanche Rush is an incentive program focused on the DeFi ecosystem holistically. and DeFi within Avalanche's context, of course. But there are other non-native protocols that are coming over, and that's what's making it interesting. And so when we announced it, we said $180 million in incentives holistically, with kind of like the foreseeable program as it runs. The thing that has happened, which you're seeing with any type of announcement this size, so Polygon, I believe, did an incentive program. Phantom and Celo just announced one recently. Is you have a lot of excitement, but that's not the long-term strategy. The long-term strategy is what's following. The announcement, of course, is exciting, and naturally with crypto, people will get very excited, and I think that's what brings in the initial burst of energy. And how we got here was Avalanche mainnet launched in September 2020, so actually almost a year ago. But that's not terribly a long time, actually, comparatively to everybody else. And so what we had to do from then till about spring was make sure that we can set up all of the primitives as kind of the base layer. And what we started to see was automated market makers, DEXs, kind of slight variants of those with farms. Some of them are implementing more kind of recent innovations like auto compounding mechanisms, single-sided liquidity pools for yields, just more advanced strategies than just a single swap, right? And so we saw that, but unfortunately, beyond price discovery, that doesn't really do much except create a bunch of marketplaces to trade back and forth in. And obviously provides great arbitrage opportunities, but that's for a very small subset of users. And so the next phase was really saying, okay, what else do we need to make this valuable to like the mainstream DeFi users? Well, I'll put it in air quotes. And that means let's get lending on board. Let's get some of the more fruitful endeavors, maybe NFT marketplaces too, because that's pretty hot these days. And so that's what we were focusing on since the springtime all the way to now and through the foreseeable future. Rush is that catalyst to really bring people in to say, hey, just try out this product. The parallel I've been drawing is, I don't know if you guys remember this, but early days of ride sharing, there was like 10 different ride sharing apps, and all of them were throwing around money like no other. Of course, there's going to be kind of like the incentive kind of locus, as you put it. And they're going to come in and they're going to game and they're going to hop around. There's not going to build that brand loyalty. But if you have certain strengths that are better than the competitors, then you might have that competitive edge already. So we firmly believe at Avalabs that when you try the ecosystem at Avalanche and really use all of the familiar tools, especially if you've come from Ethereum space. So
yeah, like I was gonna say, Jay, like I've been degenning the last like 2 weeks on Avalanche, and I mean I've kept my funds there. Like
yeah,
there,
exactly.
I can hold my Ethereum there still if I want to hold my Ethereum. I can do my Bitcoin. I can do everything else there. And yeah, there's new primitives like you're saying, auto compounders, new types of like even new NFTs like AVAX punks, crypto seals, stuff like that. Just new things that are coming, and it's easy to keep your money or your crypto assets in Avalanche because, well, why would you go back to the mainnet? Because, well, why? And then, you know, where else? Well, I guess you could go to other layer ones, but as of right now, it seems like there's a lot more, as you're saying, to offer on Avalanche. And I think the biggest thing was the lending and borrowing. That was huge.
Yeah.
Without Benki, I don't think Avalanche would really, be as prominent.
Yeah. And to that point, Andy, Avalanche is almost built for the DeFi user. And Jay, you kind of brought that up as like this higher transaction speed, lower cost. I mean, there's so much more to go back and forth, and you need that when you're powering smart contracts. So the high frequency trading kind of world of finance and building that on a decentralized railway infrastructure, like that's almost built for these supporting chains. And then, this Ethereum is kind of evolving into a public chain of some sort, like it's art and it's culture and it's like history, and there's applications for Ethereum. So like this new like crypto culture, but this financial DeFi world is almost being built around Ethereum. And kind of we're now starting to get the infrastructure to traverse kind of the inner core and then the outer layers of this. It's not almost like a chain anymore. It's this world of this crypto world.
Yeah. And I think the thing that makes it even more familiar to the average DeFi user, which likely would have interacted with the Ethereum ecosystem at one point or another, at least in these early days, is that we're keeping it familiar, both from the DeFi user side, but also the developer side. The Ethereum virtual machine is very important in the Avalanche equation. That is running on top of it. So basically Ethereum, but scaled by Avalanche Consensus is kind of like the layman's way to phrase it. And the reason why that's important is because Metamask, Truffle Suite for devs, Hard Hat, all these different Solidity focused tools, but also kind of like the middle of the road DeFi infrastructure tools like wallets and things like that. Those work out of the box on Avalanche, and you don't have to re-script anything into a different programming language. You can just use Solidity. That's what makes it easy to try and also familiar. So grand scheme of things, our upper hand right now is UX. Is it perfect? Absolutely not. And that's what kind of drives us every day to make sure that we can make it better and better. And so hopefully in Q4 of this year, we're going to see a lot of those UX improvements come to play, especially as you interact with the protocol, but also interact with the dApps themselves. So the community is super, super strong. They also know this to be one of the most competitive pieces of it. And you're seeing that already with something like the Avalanche Bridge. I use that all the time. I have plenty of ETH assets. I still do. But sometimes again, I was kind of talking about this pre-call, but if I'm paying hundreds and hundreds of dollars on gas fees and it's just not worth it. And so would rather just cross over, get those swaps done. And you'll see it's quite pleasant, I think is the way I would frame it. It's not something that's a little bit hairy like a lot of the experimental tech. You use your MetaMask, plug it in, you pick which asset you want to send over to the bridge, and it goes to the same address in MetaMask, just connected to a different network. And so all you have to do is flip the switch, and you have access to those assets, and it all shows you how it's done. Almost kind of like it's a little bit gamified, I think, the UI, and that's what makes it really fun, I think I would say.
Yeah, it's quick, it's easy, and it's fun to use because you don't pay a lot of gas, and you can do 100 transactions in a few days and not worry about it. You can get in and out of positions, right? So for those who haven't tried, you can bridge over, right? You can go on Pangolin or Trader Joe. You can put tokens into LP positions. You can go to YouYak and farm with their auto compounder. You can go to 𝗵𝗀𝗃 and deposit some AVAX or some ETH or some Bitcoin or whatever it is, earn yield, and then borrow against that to go and do other things, or to go long, or to go short. There's a small list of protocols and tokens right now. So there's going to be a lot of volatility, I believe, in terms of token prices, low market caps, small. So just kind of be careful with what you're doing there. Just to make sure that your portfolio allocations are taken care of. But there's a small list of protocols and tokens now, but I'm sure there's going to be quite a few more. And yeah, I mean, those are all opportunities that you can find yield and participate in the ecosystem. YouYak and 𝗵𝗃𝗃, I would check out first, and then kind of work your way down through the various protocols and tokens. And yeah, I mean, I'm curious kind of what you're thinking about onboarding some of the native DeFi protocols, some of the AAVE, some of the curves. I know that those are coming. Just what the timeline on that is, how the roadmap is coming. And then actually what you think about the valuation of protocols, or actually I'll just say that question, but it's coming back to me because this is going to be a good one. So what's the timeline on the roadmap for AAVE curve and some other protocols? And I'm going to get you a good one.
Yeah, so BD team's working hard, especially Luigi. He's one of the guys that's leading this effort, at least on the business development side. He's architected with our co-founders and also the rest of the gang an excellent timeline. It's not yet public, but what I can say is we are aiming for something within this month to start really rolling these things out. Basically, we're kind of at the point where we're saying, hey, what kind of incentives can you guys put up to match this program? Which pools, kind of like the, of course, interesting part, but kind of like the final intricacies of what this exactly looks like. And then with the native protocols, we announced Yay Games, and I think I want to say, I don't know, Yay Games, and I can't remember what the other
Hurricane Swap or something was one of the more recent ones. Maybe. Yeah. Okay. So timeline is kind of, this month, next month, some more of the typical and native DeFi protocols. So by the time you guys are listening to this mid-September, so, it'll be coming out soon.
Yeah.
So my follow-up question for this is, in DeFi, we have the base layer, the settlement layer, which are the Ethereums, the AVAXs, even like the Polygons, the Phantoms, even the Binance Smart Chain. So you kind of got this layer. And then you got the application layer on top, which for anybody who's been in DeFi for some time is the 𝗓𝗓 swaps, the AAVEs, the curves, the Uniswaps, the yearns, right? Those are like the blue chips, like tested Lindy effect protocols that people are familiar with, and that, you know, will probably survive for 10 years or longer. And if they survive that long, they may as well be around forever, right? So from that perspective, bringing these types of protocols to these different layers, so to Avalanche, to Phantom, to Binance Smart Chain, bringing these on, what do you think about the relationship or the competition? Let's call it a competitive relationship between the native protocols of Avalanche, so the Pangolins, the Trader Joe's, the Benkeys, when SushiSwap, AAVE, and Curve come over, right? What do you expect users to do? And do you expect protocols to like interoperate? Kind of, how do you see that competitive nature happening? Because from first glance, you know, you would imagine, oh, why would you use anything else that's not, you know, trademarked, if you will, and trusted? Like,
Yeah.
If SushiSwap is available, I'm using SushiSwap, right? You know, so kind of, well, what's your thesis there? You know, and how do you drive value to these native protocols if these vampire protocols, if you will, that are big, are just going to come and take the value from them?
Yeah, I think there will be healthy competition. I think that's good, because then it drives more aggressive innovation, I would say, on both sides, because you kind of have then, you know, 2, 3, 4 parties saying, hey, come to our side. It's a lot more fruitful, a lot more fun, easy to use, something like that. I don't think one's necessarily going to win all. So what's happening with native projects, this isn't just Avalanche specific. This is any kind of smart contract enabled chain that has native versus non-native projects. The native ones basically have decided from a business perspective, hey, it's not worth hedging across all these chains. It actually might be more fruitful for us to focus in on one protocol and understand that well, and also earn the hearts and minds of the early adopters. And so they have that upper hand already from just being familiar within that community. Of course, it's a bet, because if that ecosystem doesn't take off, then you're kind of just trapped in just one strategy, which is part of the game. And I think most people who are deciding to do that do understand that. On the flip side, you have, again, what you're calling the DeFi blue chips here. And those guys are kind of like, kind of have the upper hand in that they have larger user base, usually on their first chain of deployment, so likely ETH in this case. But what you're seeing is then they're also saying, okay, well, they know that Ethereum, because when it gets highly congested, then they're also not getting as much volume and transaction as they should be, because only the whales are participating and the rest of the world isn't really able to participate because of the high transaction fees. So they're seeing that these new chains like Avalanche as a hedge. And I think there's strengths in both strategies. The hedge is, sure, they're going to get that trusted credibility, but maybe there's something that's better for the early adopters in this new category. Maybe there's something as trivial as like brand color. One of the things that I always like to bring up as an example is, think about, again, ride sharing, like I said before, but think about any of the brands like Coca-Cola, Pepsi. It's one of them had to have come before. And if they didn't, one of them is always going to be stronger. But there's always healthy competition in that some people pick Coke versus Pepsi. And there is a stark and strong rivalry that exists between that. And I don't drink soda, and using that analogy for a second, I can't even tell the difference. So I don't really know how this actually forms, but it's just human nature to have these kind of random preferences. Sometimes it's tied into logic, but other times it's very arbitrary. And so I think you're going to see early days, it's just going to be, everyone's going to help each other out a little bit. And then you're going to start seeing separation. This is what happened when Uniswap launched in the DEX space. Hayden, humble, eager to learn, comes into our space, says, I have this cool idea where we can create liquidity pools on a X times Y equals K curve. And then all of a sudden, all these large DEXs like Bancor, for example, had raised a ton of money, and a bunch of others. They were saying, or they were kind of losing mindshare, and look at where Uniswap is now, right? And so I think you're going to see that same formation with these early chains.
Yeah. And my kind of understanding based off what you're saying is there's kind of two bets here. There's the bet of the blue chip, which is betting on the protocol to survive and to grow and to expand across every chain and to just be omnipresent and everywhere, available for all DeFi users. And that bet is less so on a specific chain and more so on the team and the community of that protocol. And then you've kind of got the bet of, say, a Pangolin, which is only on Avalanche, right? So you're kind of betting more so on Avalanche than you are Pangolin, because while the Pangolin community and team needs to do well to execute, and they have to, and it's in their roadmap, and they have to keep growing and expanding on Avalanche to provide the best experience. If Avalanche, doesn't do anything, if Avalanche it ceases to grow its mind share, Pangolin ceases to grow its mind share.
Yeah.
So betting on these native chain protocols is almost a concentrated bet on the L1 itself, almost like a higher beta bet. And then betting on blue chips as a protocol is less so on a specific chain, more so a concentrated bet on that team and that protocol to continue to do well. So it's just kind of an interesting thesis to be able to spread those out between multiple types of investments. So on ones that you're really bullish on the Avalanche chain, boom, you can find some Avalanche only protocols, and that'll probably give you a higher beta than something like a Uniswap will in terms of market cap and kind of where it's at token wise. So we don't have to get into too much of the nitty gritty, but that's just a little kind of mental model that seems to be something to look at as far as investing goes.
Yeah,
and
I like that.
Jay, what you pointed out as far as healthy competition, I think that's at the heart of it, because we're going to start to see now there's kind of these alternate layer ones that are giving ETH some healthy competition and probably pushed ETH to push out and deliver ETH 2.0 and validator nodes proof of stake model a little bit earlier than maybe it wanted to. So we're getting that continuous and aggressive innovation that you spoke to. And we're now seeing that kind of isolated off into these different layer ones, multiple and healthy competition between these different aggregators, dexes, money markets, all within each of these chains. So there's two different groups there. And it is almost kind of like, these travelers, those who have the brand identity, have more community and are starting to traverse other chains versus the native and probably more community oriented members. And Andy, you mentioned like liquidity locusts earlier. It's really who is your loyalty to is kind of the question I asked. And so some of these, let's just refer to it as liquidity. Some of this liquidity is that allegiance is to a blue chip. It's to AAVE, it's to 𝗪𝗎 and whatnot, or it's to a certain chain.
Mm-hmm.
Yeah, definitely interesting way to look at it. Now that we're on kind of the blue chip and chain kind of relationship, I'm curious what the chain to chain competition and relationship looks like, Jay, from your point of view. So first off, what is your personal vision of the multi-chain DeFi world? Coming from Avalanche and yourself, and then I'd like to dive more into it.
Yeah, with the Avalanche strategy, it's really ties back to the bridge that I was referring to earlier. The bridge, without going into too much of the intricacies, there's tons and tons of documentation on how it's actually designed. But the most important part is it's EVM compatible. So any EVM compatible smart contracts platform, you can horizontally scale the interoperability play there. So right now you have Ethereum, of course, but then you could also have, I think, Phantom's EVM. You can have other types of EVM chains, and that's much easier to integrate now that we've proven on mainnet that this bridge works with Ethereum, the largest one right now. And so you're going to see that start to kind of expand in its offering, and that's on the roadmap. So I believe it should be before the end of the year where you're going to see many more chains. I think the challenge here is composability. I think that's something that the team is very cognizant of, and I think that might not be something that gets solved overnight. It seems like it actually hasn't even been solved anywhere else, to be honest, but it seems like people are thinking through how best to work around that. Perhaps it's using something like a curve, for example, to deal with all of these different wrapped assets. And I think in the long term, with Avalanche's in Avalanche's context, you have this capability called subnets, and subnets can do a lot of different things. But one of the things as it relates to interoperability that it can do is it can help scale other chains like Ethereum with the Ethereum virtual machine running on it. You can have any chain in the context of a VM to then basically leverage Avalanche Consensus, but still operate as it was designed in its without Avalanche Consensus. So effectively just boosting the performance of Consensus and making sure that it can run. So that's actually one use case that we touch on sometimes in conversations, that I think it's not quite interoperability, but you can see where it goes. If you have all of these different chains that are basically kind of functioning off of the core Avalanche platform, then you have this robust ecosystem where it's not quite interoperability bridges, but you actually don't need for that. You don't need interoperability bridges, because now you have all of these chains on Avalanche. And I know other chains are trying to tackle that problem too. And so that's something that you've probably heard of for some time now.
Jay, I want to continue on kind of the governance and consensus mechanisms that you started to touch on there, to give people a mental model of kind of how we can organize this to something familiar. Think about, and Andy, we were talking about this yesterday about cars, and kind of the structure and organization pattern is similar. What Andy got a Tesla, so I'll shill his Tesla for him. But this self-driving aspect, the prompt was really, how is a self-driving Tesla going to communicate with a self-driving Audi? Like how the interoperability there is a question that needs to be solved. And we're starting to see this system where the organization is these different brands, right? And there's blue chips and people have their brand allegiance, but let's think of car brands as these different chains. And then you have these different models of cars within each chain, right? You have a money market, you have different models within each chain. Where do you want to put your liquidity? So the analogy isn't perfect, but it's a way of kind of organizing these different kind of ways that these projects have been isolated. So as far as and getting back to kind of the consensus mechanism between these different chains and different, maybe they're side chains or different projects, maybe continue to unpack that a little bit as far as what that looks like once we start to dive into like side chains, kind of different applications and more so what that looks like.
Yeah. So the main thing, and I won't go into the technicals because I've been actually using this trick in recent interviews more so, but on the Avalanche YouTube page, there's a 3-minute clip of Gun. He's the CEO of Avalabs and also the founder of the Avalanche Consensus protocol. He has an incredible video that explains what it means to have consensus done in a probabilistic fashion instead of deterministic. Essentially, just for this podcast, what I'll say is probabilistic allows Avalanche Consensus to scale much more rapidly than any other class of consensus model. You have two basic families that preceded Avalanche. You have Nakamoto Consensus, which we're all familiar with through Bitcoin, and classical consensus. Both have strengths, but both also have their fair share of opportunities. That's where Avalanche comes in. And so just one, I guess, kind of revision is these subnets aren't really like side chains, kind of like some of the L2 implementations that exist on Ethereum, but instead they do operate with can operate with the same set of validators that operate the main platform. So in this future of all of these different VMs running on it, and also different permission chains too, so enterprises and institutions, that's another really strong use case, because simply they don't want to lift up their walls of their walled gardens immediately. They want to also benefit from a permissionless chain. So you're going to have this very seamless ecosystem, and that's what we're striving for. Again, time and time again in this conversation, you'll find out UX and maximizing that experience is the common theme, should be for all of crypto, but absolutely is for Avalanche. We're not perfect, again, by any means right now, but that's always kind of our guiding light. And so in this future, I think, to take your car model example, I think the EV electric vehicle kind of segment, you have all of these different types of plugs, and there's not really standards across the board. And so if you were to take that analogy and draw it to the chain conversation that we're having, you would hope that all of the car companies come together and they're like, hey, maybe we should just standardize all of this, so then we can actually create less waste and make it better for the consumer. There's obviously a lot of complexities with politics and things like that, but that's kind of more or less what I think should happen. And at some future, you're going to have people that are saying, hey, we're all going to win if we all connect. And maybe there's a use case for Ethereum in some future that's absolutely clear. Maybe there's a use case for something like Polygon in the future. Maybe there's a use case for Avalanche, which is totally different. And so that's what we're going to see, I think. And all of this is moving so fast, it's a little bit hard to predict, but I think that's kind of the trajectory there.
Sweet. Yeah. Thanks for the technical insights as well. Definitely we'll check out that YouTube video to kind of learn more. It's a little bit tough to grasp it all. But yeah, it's important to know kind of what you're getting into from a technical side as a user and as an investor who's kind of into this space now. You know, a lot of us are just in the last few months, I mean, ahead of the curve in terms of getting onto multi-chain world. You know, but a lot of people will be onboarded to this multi-chain reality over the coming weeks and months, Jay. And so there's going to be a lot of confusion, a lot of like what's going on here. So, you know, you're a beginner kind of getting into DeFi. You know, you're not a huge investor, a huge believer yet, but you're getting in with, you know, a few $1,000 or something that you have, and you just been brought up to your attention that, you know, using Ethereum is kind of pointless, but you want to go the custody route. You know, what are some suggestions that you have for, you know, anybody who's looking to get into DeFi, you know, use Avalanche, or just kind of, you know, what's that look like for our audience who's listening now, who's kind of just dipping their toes in?
Yeah. With Avalanche, the thing that we're trying to do is make sure that the contract chain is properly integrated with the major exchanges. So then that off ramp from exchange to, say, like a MetaMask connected to Avalanche is seamless. Right now, I can think of probably 10 different exchanges. I'll name a few. OKCoin, that's one that supports Avalanche tokens, and you can transfer it from OKCoin directly to MetaMask. You have 𝗵𝗵𝗴𝗵, Gate.io. Those are some of the ones I'll list. The rest are on our website at AVAX.network. The thing that I would always urge is don't necessarily go to a sprint before you can start crawling or walking. I think the main thing I always say is move your assets off of that centralized exchange. I've personally been a victim of 3 different centralized exchange hacks. So I've obviously learned my lesson, I think. And from there, you realize that it's not just this kind of marketplace, holistically speaking, of crypto. It's not just this marketplace of random tokens that you think don't do anything. You then all of a sudden realize, like, think about all of your guys' first experience with DeFi, and even mine too. I remember I was like, oh my God, I didn't realize that MetaMask is this thing that lets me interact with all of these things. I just didn't understand. And the website looked the same, so it kind of confused me. But what you realize is you're like, oh, well, ETH or Avalanche, you can use those tokens and actually put them to work. Simple things like swaps, more complex things like lending and borrowing, and all these other things. So I would say focus on getting that off the exchange, getting it onto MetaMask. I think the key here is don't put too much on MetaMask, because it is a hot wallet. Not going to get into that details on this conversation, but just put in a little bit. And then if you're comfortable with that, maybe just don't even do anything after that. Just have it sitting there for a little bit. Just read through, do your own research of what's going on. And then if you find something that's interesting and you kind of understand what it is, then just use tiny amounts. And on Avalanche, you don't have to spend that much, like anything on gas, really. You spend cents to $1 on gas fees. And so it's super cheap to try it. And since crypto assets are divisible beyond the amount that fiat currencies are divisible, you don't even have to spend that much money to interact with these things. And so just try a swap first and foremost. And then from there, you're going to start building the DeFi Legos, being like, all right, well, I get how swaps work. Now let's see if I understand how auto compounder works, and so on and so forth. I think linearly a little bit. So I think that's usually how I kind of draw those steps out. But that would be my recommendation. Just start getting your toes wet and see what happens.
Yeah, and we're now starting to see kind of more efficient, better UX in those on-chain just on-ramp and off-ramp transfers. So kind of the bridge ecosystem is really kind of bringing this over the line in terms of getting funds into the DeFi world, and then from there navigating between the different chains, trying things out, trying different swaps. and yeah, getting your toes wet and going from there.
Yeah.
Cool. Jay, one thing that we ask like each kind of guest is who would you want to talk to or be stuck in an elevator with and pitch Avalanche to?
Oh my God. Wait, before I answer that question, I didn't even look up who was before me, but who was the most recent episode you guys recorded?
I think was it Will from 𝗵𝗵𝗵𝗵𝗵?
Oh,
Yes.
those guys.
Yeah.
What's Will's? Do you know Will's last name?
Harborn.
Oh yeah. I know 𝗵𝗵𝗵𝗵. They had an OTC product. I don't know if they still have it, but anyways,
yeah,
super random and in tangent. So who would I want to be in with an elevator? Oh God. The problem is it can't be anyone random because then I have to go through all of the motions of like what blockchain is, and that's a terribly boring story. But
and it wouldn't be able to happen in a minute. The elevator ride is 8 stories. We're not coming down from the Empire State Building here.
Yeah, fair enough. So let's see. Probably, maybe, I don't know, this is a cop-out, but maybe like Mark Cuban. Here's why. I'll tell you why, and I have some reasons. One, I went to Indiana University. He's an Indiana University alum, so we have that connectivity there. We see a little eye to eye, I think. He also loves Indiana basketball. I also do too. So we have a little bit of like, icebreaker situation there. He's also obviously a huge DeFi head. So I don't have to whip through the barriers of what we just talked about. I can probably cut to the chase and be like, hey, you guys, Uniswap, or you got rugged by that other protocol once. So you kind of understand what languages speak. And he's an incredible capitalist. He seeks opportunities. He's very open-minded. And so that would be my answer.
Yeah, just make fun of him for getting rugged. You're like, yo, man.
No, I can't blame him. I mean, if I make fun of him for getting rugged, he can make fun of me for getting rugged too.
You'll end up with Mavs season tickets by the end of that elevator ride.
Yeah, and honestly, I don't like the NBA that much, so that might be my way to get into the NBA as a fan.
Right. Well, thanks so much for coming on, Jay. It was an absolute pleasure, man. And learned a lot about Avalanche. I know our listeners did as well. And yeah, man, it was great.
Awesome. Yeah, this was a great conversation. Thanks, guys.
Great, Jay.